The US housing market is absolutely insane because Redfin just announced today, which is on Thursday, April 25th, that the US median home sold price reached an all-time record high. On top of that, average monthly housing payments of would-be homebuyers also reached a new all-time record high, and inventory is on the rise. So what the heck is happening? Let's discuss. And of course, if you guys get any value out of today's video, then please hit the like button and also consider subscribing as well. I post frequent housing market updates so you guys can be more informed. So the median US home sold price reached an all-time record high of $383,725 during the 4 weeks ended April 21st. That's up 5.2% from 12 months ago, one of the biggest jumps since October of 2022. I'll have some stats to show how each of the metros fares because there's only one metro that is down on a year-over-year basis, but of course, 49 of the 50 biggest metros are up year over year. Meanwhile, the average weekly mortgage rate hit 7.1% this week. That was actually the report from Freddie Mac last week, though. It's the highest level since November of 2023. Also, when looking at daily rates, according to the Mortgage News Daily as of today, which is again April 25th, average daily rates for people with great credit increased to over 7.5%, the highest rates we've had since mid-November last year, a 5-month high. So let's really briefly talk about that because today, according to Freddie Mac, which must have been just after Redfin announced the report here, is that weekly rates went from 7.10%, which is what Redfin's reporting here. It increased to 7.17%. 1 year ago, we were at 6.43%. So again, just like I mentioned in my video from 1 week ago, we'll see new all-time record highs regarding average monthly housing payments in Redfin's report that will be announced in 1 week because rates are still on the rise. And of course, home prices are up as well. So mortgage rates have been on the rise as it became clear that the Fed would keep interest rates higher for longer than expected. High prices and higher rates drove the median monthly housing payment to a new all-time record high of $2,843 per month. That's up 13% year over year. Prices are soaring despite the fact there's more inventory than last year. So they say here that new listings increased by 10.2%, but just about 1 month ago, we saw a gain of about 12%. So this lock-in effect in which homeowners have rates at 3 and 4%, they're deciding not to list their house for sale, not in as great of numbers compared to a month ago because rates have increased so much. We're right now at 7.5%, absolutely crazy. And that's for people with great credit putting 25% down. In any case, it says the growth rate in listings may be losing momentum. As I mentioned, prices are being buoyed by the fact that inventory remains low despite the recent improvement. I would say it depends on the data you're looking at. When looking at data from Redfin, I believe we're up by about 10% year over year and at least a 3-year high. However, when looking at data from Realtor.com, just announced, this was today, right? Yeah, also announced today that active listings surged by 31.7%. I believe that's the highest year-over-year increase we've had in many, many months. Also, according to Research.com, they are also reporting gains of around 30% of housing inventory as well. We're talking about existing houses, by the way, in today's video, excluding brand new home construction. So for the week ended April 19th this year, according to Research.com, we're at 543,000. 1 year ago this time, we're at about 415,000. So we have approximately 130,000 more houses for sale compared to 1 year ago. However, at 543,000, this is a way higher compared to 2022 as well as 2021. But we're still lower compared to pre-pandemic levels. Back in 2020, we had 741,000 compared to 543,000 right now. And also in the first part of May 2019, around 883,000. One thing I want to mention though is that Even though we have, far fewer homes for sale right now compared to 2018, 2019, it does not mean that home prices have to or won't decrease until we get to those levels or until we get to pre-pandemic levels. Again, I talk about this pretty frequently. In my opinion, we have to look at the rate of increases of inventory and not compare it to pre-pandemic levels. And that's exactly what happened in 2022, for example. So in 2022, the peak of inventory was at around 575,000 homes for sale, where a more normal range is actually over 800,000. But because inventory skyrocketed, I believe it doubled in less than 6 months. That's why home prices tanked in the last half of 2022. So we'll keep a watchful eye regarding inventory levels over the next coming weeks and months here, because this is a big increase over the past 2 weeks. Was exactly what I've been saying it's going to happen, because we're seeing more new listings hitting the market. We're also seeing a pullback in home buying demand. So a big increase over the past 2 weeks here, going from about 513,000 to about 543,000 in just 2 weeks. So we'll keep a watchful eye on that. And that will kind of give us a gauge regarding which direction we're headed. Anyways, when talking about this report here, I just blew my mind. So let's talk about a little bit more what Redfin had to say. Demand is holding up fairly well in the face of 7% plus rates, though some indicators are starting to show a slowdown. And I'll have an update for you guys regarding that, because I'm going to make a video looking at early indications of home buying demand, looking at Google searches, home tours by real estate agents, pending home sales, and much, much more. So stay tuned for that. So in any case, let's talk about this report here from Redfin. And this, by the way, covers the 4 weeks ended April 21st. They look at 400 plus US metros, and their data goes back to 2015. At least their weekly data goes back then. So again, the median sold price around 384,000, an all-time record high, the biggest increase since October of 2022, with the exception of these two 4-week periods. Let's have a look at Redfin's data center regarding the home sold prices. You can see this skyrocketing rates, or prices, I should say, right now at 384,000. That surpasses the previous peak, which is back in more or less June 2022 at around 383,000. Also, this is at least, or not at least, this is also about 19% higher compared to the same time frame in 2021. Also, this is quite the reversal compared to what happened in 2023. This time last year, prices were down by 3%. Now they're up by about 5%. Every housing market's different though, right? So let's have a look at the 50 most populous metros to see how they fare. And there's some, giant increases. Anaheim, California, up by a whopping 25%. Then we have New Brunswick, New Jersey, up by 14.9%. Detroit, West Palm Beach, Florida, and San Jose, all up by more than 10%. In contrast, there's only one metro, which is Austin, Texas, down by 0.9%. So 49 of the 50 biggest metros are up on a year-over-year basis. And actually, let's look at Anaheim, California really quickly here. This is on Redfin's data center. Their median sold price, so we're up by 25%. We're not talking about the average sale price at around 200,000, because in Anaheim, we're at 1,195,000. At this time last year, we were at approximately 956,000. And look at that. Last year, down 10%. Now it's up a whopping 25%. What's astonishing about this is that even though new listings increased by 18.4% year over year in Anaheim, California, prices still increased by 25%. So let's really quickly have a look at active listings to kind of gauge what's going on there. Yeah, look at that. So, on a national level, we're more or less at a 3-year high, right? But look at active listings in Anaheim. It has been flat over the past month or so, and also down by about 8% on a year-over-year basis. Whereas on a national level, let's look at that real quick. On a national level, we're up by 10% and at least a 3-year high. So inventory can really tell us the balance between supply and demand. Anaheim, Inventory down big time, at least a 3-year low, whereas on a national level, we're at least a 3-year high. Let's also take a look at Austin, Texas as well, because that's the only metro that's down on a year-over-year basis. So again, look at this. Inventory up by 5.5% and at least a 3-year high as well. Regarding prices, take a look at that. We're down by approximately 1%. In addition, look at the difference between this year compared to 2022. Right now, it's at 464,000. At this time in 2022, we're at approximately 541,000. This means the median sold price in Austin, Texas has decreased a whopping 14% over the past 2 years. In addition, when looking at levels in 2021, it's getting really close to being at least a 3-year low right now. Right now, it's at 464,000. At this time in 2021, they're at approximately 445,000. What a difference 3 years makes, right? Back in 2021, the median sold price up a whopping 35% year over year. Now it's down by 1%. And again, part of the reason why prices are decreasing in Austin, Texas, because inventory is skyrocketing up by 5.5%, at least a 3-year high. And this, by the way, excludes brand new home construction. When looking at new home construction in the Austin, Dallas, San Antonio, a lot of markets in which they have land to build on, we're seeing a lot of houses or new houses being built. So this could likely impact close home sales of existing houses as well. All right, let's get back to Redfin support. Let's talk about asking prices as well, because asking prices, these are the prices you ask for your house. The median asking price on a national level, that increased a whopping 6.7% and also reached a new all-time record high. That year-over-year increase is also the biggest increase since September of 2022. Let's take a look at that. I mean, this is just absolutely wild to see. Asking prices absolutely skyrocketing right now on a national level. Every housing market's different, but up by 6.7%, around $416,000. At this time last year, it was around $389,000 and also around $339,000 at this time in 2021. Also, like I mentioned, average monthly housing payments up a whopping 12.6%. and reach a new all-time record high. We'll have a new all-time record high next week because rates have increased from this rate from 7.1 to 7.17%. So look for a new all-time record high next week as well. And here's a chart showing average payments right now. I mean, basically skyrocketing due to increases of prices as well as rates as well. The previous all-time record high was back in October, by the way, at around, I think it was just under $2,800 per month. And that was back when the average 30-year fixed rate was around 8%. Now they're looking at rates at around 7.10%. So your average monthly housing payment just under $2,900 per month, which is, way higher compared to 2021. Back then, your average monthly housing payment was around $1,600 per month. Now it's a whopping $2,843. Can you say a lack of housing affordability nationwide, which is sad but true. Let's change gears a little bit here and talk about new listings, pending home sales, as well as active listings. So pending home sales, a measure of contracts being signed between buyers and sellers, fell by 3.8%. That's the biggest decline in about 6 weeks. Meanwhile, new listings increased by 10.2%. But again, about 1 month ago, we saw a gain of around 12%. Active listings up by 10.1%. However, when looking at data from Realtor.com and AltusResearch.com, they are reporting gains of around 30% and not 10%. Here's Redfin's data center looking at pending home sales. It's down by about 4%, and also it's at least a 3-year high during this time frame. And it's basically kind of going or has been flat for about 2 months now, where it's more normal to see increases of pending home sales during the spring home buying season, right? So that's very much a lead indication of close home sales in the next 1 to 2 months. This implies that we'll see a relatively low level of existing home sales in the next coming months. In regards to new listings, That's down from 2021 and 22, but up by 10.2% from 1 year ago. But approximately 1 month ago, we were up by 12.0%. So in other words, we're still up year over year, but the gains are actually losing momentum right now. And that's probably one of the reasons why active listings have been relatively flat over the past month. As you can see right there, active listings are increasing and is at least a 3-year high, but we're not seeing this big increase like we saw in February as well as March. All right, let's take a look at how each of the 50 most populous metros fared regarding pending sales and as well as new listings. So pending home sales actually increased in 9 of the 50 biggest metros. The biggest increase was actually in San Jose, California, followed by San Francisco, Seattle, Milwaukee, and Anaheim. In contrast, the biggest decreases of contracts being signed between buyers and sellers of existing houses was in Nassau County, down by nearly 14%. Then we have Phoenix, Fort Lauderdale, Florida, Houston, and Riverside. In regards to new listings increased once again. San Jose, California has been the top spot for pending sales as well as new listings for about a month now. So new listings surged by 43%. And Jacksonville, Florida surged by 29%. Then we have Phoenix, Sacramento, where I live, and Miami. In contrast, there was 6 metros that decreased year over year. Those metros were New York, New Jersey, down by 9%. Then we have Cleveland, Ohio, Chicago, Milwaukee, Providence, Rhode Island, and Detroit. I also want to discuss the month supply as well, because the month supply on a national level is at 3.2 months. That's a slight increase compared to last year, which is in orange right here. But the month supply, even though it has been relatively flat and going down, which is seasonal, it's at least a 3-year high as well. So back in 2022, we had more or less, close to all-time record lows of inventory, and the month supply was only around 1.8 months. Now it's at 3.2 months. Meanwhile, 43% of pending home sales went under contract within the first 2 weeks. In other words, 43% of the time, houses sold very quickly, but that is at least a 3-year low. So in 2022, for example, that ratio was around 55%. Now it's at 43.3%. Days on the market. So it's taking approximately 35 days to sell a house. That's when you list your home for sale. And then when you accept an offer from a home buyer, that measure is days in the market. However, it doesn't become a measure until the house actually closes or becomes finalized. So this is very much a lagging indication of our housing market. So right now we're at 35 days, roughly on par with what we saw in 2023. Also, around 30% of houses that sold over the past 1 month sold over the seller's final list price. This means, of course, that 70% sold at or below the seller's final list price. And this is roughly on par with what we saw back in 2023. The share price drops, keep in mind here, we're talking about all-time record highs for sold prices, a lagging indication, but also all-time record highs for asking prices. Yet, look at this, the share price drops at least a 3-year high during this time frame by far. The share price drops at 6% right now. 1 year ago, we were just under 4.5%. The share price drops absolutely skyrocketing over the past 1 month. Also, the average sale price to final list price ratio is at 99.2%. This means on average, for the houses that sold, a lagging indication, they sold for 0.8 percentage points less than the seller's final list price. At this time in 2022, houses were selling for way over asking, on average, just over 2% over asking. Now they're around 1% below asking. And with that said, please comment below with your biggest takeaways from today's video. Also, if you guys want a real estate agent referral, check out my website, which is realestateteamfinder.com. Hope you guys have an awesome day and look forward to seeing you on the next video.